Delighted now that we've got Andrew Sangster, who's editor-in-chief of Hotel Analyst. He's also a partner of ours at the Operational Real Estate Investment Festival. Thank you, Andrew, for joining. But just before you guys kick off, we do have right now happening at 12 o'clock, or 12:30, we've got a health session going on for the next 30 minutes. So do join that if you want. That's being run by Stephen Marks. And then please do join the all the exhibition and say hello to the exhibitors who are in the expo part of this event. Andrew, I'll hand over to you. Thank you for joining us.
Thanks, Jonathan. Good to be here. I think after this session, some of you might need to have that yoga session, so I hope you've taped it. So I'm, as Jonathan just introduced me, I'm a financial journalist who specialised in the hotel sector for the last 25, nearly 30 years. I run a company called Hotel Analyst. This session is going to be dealing with what the investment market looks like post the virus, when we're over the virus. So obviously it begs the question, when that is going to be. We'll come back to that in a moment. But first, I'd like to introduce my panel. Paul, who's obviously being distracted at the moment. Paul, just wave to everybody. Paul Slattery is an investment banker. He's done some of the biggest deals in the sector. He currently works for a firm. He's the founder and principal of Otus & Co. And next to him, we have Desmond Taljaard, Managing Director of L&R Hotels. Hi, Desmond. Okay, shall we crack on? Great. Right. So in terms of when are we post-virus? At Hotel Analyst, our working assumption is that it's going to be 18 months plus, realistically, until we get a vaccine for the virus, until that's widely distributed. We're not going to get back to anything like normal, whatever that new normal is. We're not here to discuss that moment in time, whenever it's going to be. Frankly, none of us are virologists, so we're not really that equipped to deal with that particular aspect of it. But what we are going to discuss is what the environment is going to be looking like. So we had actually a surprisingly optimistic view, I felt, from Roger Butel this morning. It's interesting, the OECD is talking about 2 percentage points of GDP for every month of lockdown. Massive economic calamity we're currently in. But looking out of that, the other side of this, when is the recovery, in what areas is the recovery going to get started? Have I lost Desmond? Are you here? And in terms of the recovery then, Desmond, are you with us, or are you hiding?
I can see you all. I don't know if you can hear me or not.
Oh, we can hear you. Yes, there we go. Brilliant. Lovely to have you.
I can see you perfectly.
So let's kick off in terms of market segments, in terms of geography, where the recovery is going to start kicking in. Desmond, I'm going to put that one to you as the owner and operator.
On condition that whatever I say is going to be wrong, and we're only debating degrees of wrongness. We have, you may be aware, we have a whole series of. Can you put your thumbs up occasionally when I'm talking, so I know you can still hear me?
You're all good. Yeah.
I could be talking indefinitely to a blank wall, which would be normal business practice for me. Whatever I say is going to be wrong, but we have a whole inventory of hotels across the Mediterranean. And we're grappling with the various government support to get the seasonal hotels open at the moment. I would say that every day that passes, we're probably adding on half to a whole week of delayed opening times for those seasonal hotels. We're going to get to a break-even point sometime, unfortunately sooner rather than later, where it's going to question whether it's actually be economically viable to open those hotels, simply for the time it takes to get staff in, get them trained, get them settled, bring them on island, and fulfill the government contract that require, in some cases, 6 months pay or more, even if they're only available to work for 6 weeks. So I actually had a conversation with one of our competitors yesterday as well, which has over 15,000 rooms across the Mediterranean, and they are countenancing not opening until April 2021. So think of not only the impact on the businesses, but the catastrophe for the city islands that are going to lose effectively a whole year's GDP. on top of funding interest costs and other potential statutory penalties and municipality charges, etc. So it's going to be, I'll tell you.
Well, Desmond, you're breaking up. We've lost you. So I'll jump into. We'll come back to you in a moment, Desmond. We'll jump in with Paul. Well, let's talk. Just move it on a little. Talk about transient leisure demand, transient business.
At the moment,
Andrew, can we go back a bit?
Yeah.
Before we get into the specific details, there's I think some things that we have to get in perspective here. We are consumed with C19 at the moment.
Yeah.
But I'm afraid that's just not the whole story. We have just been in a period, a 10-year period of the new normal, of low economic growth, of very little growth in incomes at all. And that's lasted since the Great Recession. In the UK, we've got Brexit. We've had the lead up to Brexit. After we've done with C19, we've then got Brexit to deal with. So this isn't just one thing we're having to deal with. It's a whole bundle of things. Not only that, if we take countries like the US and the UK, in there, hospitality and travel is the largest component of the experience business sector. And that is the most severely hit of all. Everybody knows that. It is also economically, it has the biggest impact in the US and the UK, which incidentally are two of the largest, most developed hotel businesses in the world.
Which is quite a counterpoint to what Roger Bootle was saying, isn't it? Because he was expecting a recovery to come through in the UK and the US first.
It's the truth. If Roger wants to ignore all of that, that's fine. But these are the realities we're having to live with.
Okay, Desmond. In terms of the crash, so we're seeing in terms of the economic damage that's being done. There's been comparisons made to the global financial crisis, 2008, 2009, even as back as the far back as the Great Depression. This is the sort of magnitude of that. One of the surprising things of the GFC, well, we didn't see the level of distress. We didn't see the number of hotel chains going into administration that many expected. It certainly wasn't a rerun of the 1990s. Do you think this time around we are going to see more distress? Do you think we are going to see more administrations?
Well, where I'm in the same camp as Paul is I do think we're going to see a second wave of economic catastrophe following on this first medical catastrophe. When I asked a question about 2008, my comparison and contrast is that in 2008, this led to an economic depression. We've got an economic catastrophe that could well lead to financial collapse. So anyone with more than 85 grand in a bank account better watch out and start shifting that money around. If I look at our perspective, where we're aware that rents are not being paid by certain tenants, which means that banks are not being paid their interest or their mortgage, and you contemplate the multiplier domino effects of that, it's very easy to portray a highly dystopian view in the next 3 to 5 years of being great misery. That having been said, if you look at the half-lives of recovery through the last, whether it was 9/11 or foot and mouth or SARS or 2008, the recovery seems to go that much quicker. And I think there was some interesting commentary on the right-hand side of the page of people posting in comments. And there is, I think for the historical expert, you'll see that the speed of recovery has been improving. What worries me is that there's no government, I think, that's got its arms around the full extent of this, tsunami of broad-based economic collapse.
But Desmond,
have a great day, everyone.
Desmond, in all of these situations, we in the sector had simply to live with the economic realities that were confronting us, and we got on with it. A big difference this time is, first of all, over the past 10 years, business demand into hotels has grown very slowly. And the reason for that is quite simple. That's particularly the US and UK.
That's not
It is
true.
indeed.
Last year, they sold more rooms in the UK than ever before
I accept
without
that.
taking account of Airbnb.
I accept that. Business travel has grown slowly. I haven't said it shrunk, it grew slowly. And it grew slowly because some of our major source markets for business travel, like retailing, like financial services, like communication services, all shrank. We can't simply expect all the growth that you'd be looking for while that is happening. When we come out of C19, that is going to continue happening. Okay? So first of all, business travel.
Let's move on and start. Hang on a minute. Let's move on and start talking about when we're coming out of it, and let's focus on that piece. And Paul, I mean, you're involved in the sell-off of the Forte assets, the biggest disposal of hospitality assets we've seen in Europe. What do you think is going to be happening this time around in terms of consolidations? You know, who are going to be the winners? Who are going to be the losers? Just in generic terms, are the global majors going to be in the driving seat here, and is it the smaller chains going to be the weaker ones?
I think some of the first things that we're seeing happening at the moment is that there are opportunities, requirements for the cleaning up of corporate finances. As Desmond well knows, there's been some very fancy financing structures that have emerged over recent years in order to get deals done. Bankers are working very hard at the moment, to try to clean up that act. Next, corporates have got the opportunity at the moment to clean up their portfolios. A rule of thumb that you might like to take is that the larger the hotel portfolio, the more problem hotels that they've got. There's an opportunity for them to do some cleanup there. I think M&A is liable to be center stage. And the reason for that is multifold. First of all, if we take all of Europe, there's over 1,000 hotel brands in Europe with more than 4 hotels. That's a ridiculous mess. It's unsustainable. Next, there is a whole bundle of capital structures within hotel companies that are under extreme stress at the moment, particularly leaseholds. I think also one of the things that the run up to and C19 is illustrating that for many of the global majors, for example, there's been an assumption that has been made that asset light is risk-free. Well, it's not. We can see that in a whole bundle of ways. All you need to do is ask Desmond and how happy he is with the returns that some of his managers are managing companies, brand companies are delivering to him.
When you're saying M&A is centre stage, who's going to be driving that M&A? Who's writing the checks for that?
Oh, if I knew that, I wouldn't be sitting here at the moment.
But what, I mean,
some of the things that there are.
Is it private equity? I mean, we hear about this wall of money, private equity coming in.
There is private equity. There is.
I think there's a really interesting debate to be had about whether the tone's going to be different this time versus 2008. I'm not sure society's going to take well with all the predatory language like vultures eating off the carcasses of cowed non-performing loans, or my favorite one, unable to repay, is what they're now calling Italian non-performing loans. That somehow circumvents some Basel II agreement. Who knew that? But I think there's going to be a lot more scrutiny of how, of let's say, the morality of how people are picking over the carcasses now, when there's been this alleged communal suffering and getting together to fight the single enemy of this virus. And so I think I would imagine some of those circling firms are a bit more circumspect about how they dive in, start slashing and burning. Ironically, that may be an unfortunate outcome, because the long overdue of the eradication of poor inventory in the sector may yet escape again. And we've talked through a variety of cycles on countless panels about when the legendary under-demolished portfolios are going to start to disappear or be repurposed, or maybe put to other forms of accommodation. And it never seems to happen. And we say at this time of the cycle, maybe this time it's going to happen. And I think we do. And I think implicit in Paul's comment was that we're talking about restructuring supply side as well as demand. And so I think there's a greater prospect of the supply, fingers crossed, of supply being restructured this time around. I don't think society is going to take well to the, I won't name the large American PE firms, they know that they are. Check my resume, for example, circling around and overtly exploiting what has been a catastrophic global.
Let's pick up your point on restructuring. What sort of nature is this going to take? Is this the mom and pops, as the Americans call them? Are we going to see them coming under stress and leaving the business? What about
Andrew, I think one of the things that seems to me clear at the moment is the demand isn't going to be dripping out of the skies for us. It will be tougher to get demand. If you are small, you simply do not have the cash flow. You do not have the access to funds to capture demand. So the smaller the operators, the greater the problem that they will have within that. That's one of the things that will drive M&A to consolidate.
I take a different view. I think we're going to see the final elimination of the 3- and 4-star portfolio, which have expensive operating business models, but don't have the rates and the day rates to support that activity. So I think we're going to see some polarization between select service, bedroom factories, and the more luxury experiential full service.
That could be the case. That absolutely could be the case.
And that's where I see the new delicate phrase of repurposing.
Your moral position, Desmond, is very touching about the vulture funds. Very, very touching. Sadly, it's not the case.
They should be in the yoga session, I think.
Let me say one or two things about that. First of all, of course, there are lots of private equity funds, hedge funds that are sitting on money at the moment, and they need to put it to use. Where do they get all their capital? Mostly from insurance companies, from pension funds, from other savings institutions, and they've got it because they are designed to get massive returns, which we need for our pensions, we need for our savings, we need to pay our insurance claims. Those guys will be active. If there is a bargain to be had, they will be all over it in a whole bundle of different ways. I don't see how they are going to sit back and become holier than thou and ignore such opportunities to make super returns as they would see it. They need it.
Well, how are banks going to have the balance sheets to go and enforce on them? Unless the government's coming in and bailing them out, as happened 12 years ago, I don't think the banks will be able to take the capital straight.
It's more extend and pretend. It's an interesting. But I just want to touch on this restructuring piece, because we heard earlier today in terms of there's a lot of fear about business travel and how much slower that's going to be returned, and people are expecting tourism, particularly domestic tourism, to come back first. What impact is that going to have in terms of the nature and structure of the industry? I mean, how fit for purpose is the current stock, and how will it have to be reshaped to accommodate this new type of demand?
In the short term, of course, it's not. And what I mean by that is this: if we take the UK as an example, we have double the number of nights spent by people leaving the UK than by people coming into the UK. Our international travel deficit has doubled in the past 20 years.
And that's probably true across Northern Europe, right? So Germany, probably. Scandinavia. Yeah.
Now, if it is the case that people are reluctant to travel internationally and they decide to stay at home, the UK quite simply cannot cope with that volume of leisure travel coming back, staying in the UK market. We don't have the hotels in the places that people want to go. We certainly don't have the weather. We don't have the value that people have been used to over the past 30 years or more down in the Mediterranean. We don't have a travel infrastructure to take them there and back. There's a whole mess building up if that happens. Desmond, of course, will be happy.
I fundamentally disagree. I think people will adapt. and they'll even find things to do in Barnsley or Bradford.
Wow, I want to see that.
Nothing wrong with Bradford.
I lost my honorary keys to Barnsley, and that's great. But who'd have thought people would go to Cornwall to look at an Eden Centre 20 years ago? So people do adapt, people do evolve, and if you particularly if you reflect on the Spire cities, which have education and business at their centre, and there are a good 20 of those that can attract and support substantial overseas inbound business. That's the answer to your question: where the people can do, where they're going to go, and what they're going to do, Paul. So I'm not as pessimistic as you about Britain being burdened by having to put up with its own lager layouts or new educational tourists or cultural tourists.
But you'll win out of it, Desmond. All of your hotels in the UK will be full, and you'll have the opportunity to charge phenomenal rates. You can't ask for a better situation than that.
Well, you can do the brochure.
the country and the economy, and not only us, but as Andrew reminded us, most of Northern Europe are not able to deal with that. But it's the major problem. It's not only.
I don't think that's the problem. I don't understand why you're painting that as a curse. People have to find means.
Let me tell you why. What it's going to require is not only our government, but other governments as well, to find themselves on the road to Damascus. They're going to have to realize that they are going to have to invest major funds in our sector to attract foreign visitors to come in. Just a simple statistic. Last year, in the airline passenger tax, the UK raised 50 times more money than they spent attracting foreign visitors. Right? They will need to spend on travel infrastructure. They will need to spend growing demand.
But when we've got FCO advice, which we have at the moment, indefinitely postponing foreign travel, I mean, it's a very different world, right? So what we're talking about is post this and how quickly it's going to come back post this. Do you see that happening? I mean, do you see international travel rebounding that quickly? I mean,
no. But let me say this: I can rewrite the whole history of humankind in a few simple phrases. Greater proportions of enlarged populations traveling farther more frequently. That's been the history of humankind. This is a pestilence, a plague, a problem along the way. It's a blip. We will come out of this and we will grow. What we're discussing here, a fine-tuning of when we're going to come out of it. What we're discussing is fine-tuning which markets are going to come and which are not, who's going to benefit and who's going to not. But the long-term growth is, yes, it's set.
It's there. It's good. So, Desmond, in terms of just the government interventions, we've heard a bit about that already. And Roger Dow was talking about that in terms of the need to support the sector. Is are governments actually being supportive, do you think, in terms of what they've done?
I think at the moment they're just in a state of disarray. I mean, what is it that they shouldn't be supporting? Wherever you examine data, it's all the unprecedented use of the word unprecedented. I think is never used it to such an extent before. But I think the Purchase Manager Index dropped its lowest level ever in history to below 20. Across most of European countries, car purchases are down more than 40% year on year, and that's when shops are still open in half of March. So it feels I might be on the wrong team here, but it feels like we're not the only people in the special need camp, and it maybe that's not fighting our own corner, but it's difficult to think of any sector that isn't in need of substantial revamping and support.
Right. Yes, the difference is, Desmond, we as a sector are the worst at having the ear of government. There are very few people in our sectors that have got the talents to do that. We have got the smallest voice. We have the smallest voice. For years,
we've gone to various quangos or representative bodies. There are people by professionals who you wouldn't necessarily want to put in charge of your medium-sized hotel. So whose fault is that we haven't?
We all have to take responsibility. It was lovely to see earlier in the programme that Roger Dow was on. Roger is the international stalwart of this as chief executive of the US Travel Association. A great guy. He has done more, in my view, than anyone else in this. And we need more people like Roger Dow able to have the ear of presidents, of prime ministers, and to be able to persuade them of the need that there is within our sector, because the market is not going to recover and grow with its full potential without that, in my view.
Well, I think you make your mind up, Paul, because we're talking about shrinking the market because of structural oversupply of the wrong product. Maybe if look at the UK, you shrink that product and it'll be right size and will be profitable and earn a good return. And what normally happens is everyone starts building again and eliminates any decent return on investment. We are here not just for the love of it, but also to make money.
Yes, indeed.
But it is difficult to get the ear of government when all you want is to cut VAT.
That's silly.
Cut business rates.
That's silly.
And
I think we're just about running out of time. Just a sort of final question for you both, in terms of you're very experienced in the sector, looking at the opportunities going forward, looking at the best opportunities as we come out of this. Where would you be looking to put your own pension fund? What sort of areas of the hospitality business do you think has the greatest growth potential coming out the other side of this?
To say London and regional.
Yeah, workout special. I would say that there aren't a lot of experienced asset managers that know how to fix. I would say both the front of house and not to talk our own story, but can also fix front of house as well as get the financial structure sorted out. And you're going to need some pretty multi-talented people to fix that when we emerge from the mess. I am going to show you one piece of paper I brought with me before, which I don't understand no one's mentioned. You know what this is for old people in the room? It's a yellow passport that shows what inoculations you've got. I've got my yellow fever inoculated there. I don't know why the FDA and everyone else is fussing around how we to come out of this. You get a vaccine or get antibodies and put it in a stand. And that's how you get Nigeria in 2014. The world's had this for ages. We don't need new think tanks to come up with a solution. It already exists.
Okay, so you're putting your money in an asset management advisory firm. That's the way.
No, I think that's part because that you're not going to get the. If you're looking at a specific leisure and destination, I think there will be very big opportunities in some key global cities coming up, and I think that's what we'll be keeping an eye out for.
Okay.
Say no more.
I would go for companies that have power in specific marketplaces, in countries, that they have a high density in the countries, that they have got hotels that are designed much more as instruments to produce a return on capital. I'm not in the business, and I deny that I'm offering this as a recommendation to buy shares. But if you take that notion, you're looking at companies like Scandic in the Nordic region, big presence there, efficient hotels. You're looking at Whitbread in the UK or Travelodge in the big presence. Accor in France, they have got power in tight destinations where they can flex their muscle to get demand. The smaller chains, not so much. Those relying on international travel will take a while.
Great. Well, we got some share tips out of you both. So thank you very much. I think we're now I don't know whether handing over to Jonathan. Oh, here's Jonathan.
Oh, here I am.
Hey. But did you want to ask, you WhatsApped me, I think, halfway through that, Jonathan. Do you want to ask anything?
Actually, there was a couple of questions that came through. One was from Patrick Fitzgibbon about UK hospitality and quite impact, haven't they, in defending our industry and getting be furloughed.
Kate Nichols is the best that we've got in the UK.
Yeah.
Quite simple. Quite simple.
And
She's doing sterling work.
Job.
Sorry?
And doing a great job as well.
Great job. Sterling work.
Excellent. Andrew, where would you put your money right now?
Oh, me. I agree with Paul to a large extent. Would be slightly more nervous about Scandic's lease portfolio than Paul, I think. I would be quite hesitant about that. I think I would look for something which had a little bit more flexibility in the real estate agreement. So certainly Whitbread is a very good candidate. Also, I think their distribution channels they have where they've got 97% of distribution through their own channels, I think gives them huge power in the market. So I think somebody like that is what's going to happen. But I think this is going to be a time where the bigger are going to get bigger quicker. And I think we're going to see a lot of consolidation. And I mean, I've been in this business, 20, 25 years, and there's lots and lots of talk about consolidation. It's never really happened. We don't have any pricing power in the marketplace. When we begin to get, companies with a real presence in the market, so Accor in France, Whitbread in the UK, they have a little bit of pricing power that they will be able to extract, I think, a better return than the rest of us.
And Andrew, what about the likes of Airbnb? How are they going to perform after this?
I think they're toast, to be honest. They had an opportunity to switch into a standard OTA model because they came in with a much lower rate. They could have swept up a whole bunch of stuff. They missed that about 8-10 years ago. Once they've missed that, they've blown it now. I don't see how they get out of the hole they're in. The problem is they're all in the long tail of the whole distribution business, and that long tail costs so much more to service. Go on.
Can I quick question is why do you think all the great brands that keep telling us how great they are have not now taken the opportunity to sort out Booking.com and Expedia and put them in a box and say, if you want to come back and ride a recovery with us, you can have to be on a proper economic basis this time?
Well, I think to an extent they have been put back in the box. I mean, if you look at what's happened in terms of commission levels, they've gone right down. It costs no more to get a hotel room through Booking.com or Expedia than it does if you go through the own hotel distribution channels. I mean, ultimately, Google's the winner in both cases.
Well, not correct if you're paying twice, obviously.
What's that?
Not correct if you're paying twice.
Well, you're not paying twice. I mean, because you're either paying Google if you're doing it yourself, or you're paying Expedia or Booking if you're doing, if you go through them.
You're paying brand top line as well for that privilege.
Say again.
You're paying effectively turnover percentage on both. It's a rhetorical question to where are the brands?
Yeah, no, I mean, I would agree. I mean, that's an issue they've got to address. I totally agree with that. And those management agreements, franchise agreements, are going to have to be addressed. They can't do a fee on a fee, which is a huge bone of contention for owners. I agree with you.
Well, that's what they're doing. I want to know where.
Yeah, no, I think that will.
The bars and the setters and the Sorensons of this world, what they're doing, staring out the window, they should be properly acting on behalf of the owners. And putting these OTAs in a box because we've been pillaged for the last 15 years by them.
Well, I think that they're a good deal back in the box. Look at the share price of Booking.
One of the things that's developed with the OTAs is that proportionately fewer and fewer of the hotels whose rooms they sell are chain affiliated, and certainly larger chain affiliated. So that more and more the box that they have been put in has been for the short chains and mamas and papas. Now those are going to be the ones that are under most pressure as we're coming out of this and going forward. The least capital sound, and I think that the whole basis of the relationship is going to change. It's in the hands of the chains. They're going to have to fight hard to get demand.
They got nothing to do for it.
On that note, I think we better end it now. We could go on all afternoon.
A drink in our hand, it would be great.
It's time for a drink, and I thank you, Paul, for hosting us lunch, sponsoring lunch. It's very kind of you.
Delighted.
First time you got your money out, which is great. Desmond, Paul, Andrew, thank you so much for taking part in interesting questions. I liked the interesting opinions here. And
do I press leave now?
You just need to leave. Thanks so much.
See you
So we're
all.
going to have a break now. We've got a 15-minute coffee break.